All eyes, of course, on the US-brokered Israel-Lebanon talks as well, taking place today in Washington. But now, as a response to the conflict, the European Bank for Reconstruction and Development has launched a conflict response package to neighbouring countries. They're also monitoring the impact the war is having on the global economy. For more, Euronews' Mara Gwynne-Jones spoke to the president of the EBRD, Odile Renaud-Basso.
So there is an impact which is directly related to energy prices, and we see that across all our countries of operation. So the increase of energy prices being oil and gas, but you also have countries which are very close to the area of the conflict, which are impacted by a drop of tourism. A big important element also is increase of energy price will fuel inflation, and this also has an impact on interest rates, because the risk appetite in market has been dropping and interest rates has been increasing all over the economies. And this has a big impact for countries which have a high debt level, deficit issues, and so forth.
And I know that you've recently introduced a €5 billion package to aid these countries. How soon can that money flow? Because I'm thinking of places like Lebanon, where there's still a real risk of escalation, still an active war. Can you support these countries and their economies while the situation is so volatile?
So indeed, when we talk about this 5 billion level of investment, we are focusing on countries which are very close to the conflict. So Lebanon, Jordan, Egypt, Turkey, Armenia, and the idea is to continue to support them in investment. So when you have private sector banks which are withdrawing or reducing their exposure, reducing their investment in these countries, we are stepping in a way as a counter-cyclical bank, which is there to continue to support investment.
Yet, as we speak, President, talks between Iran and the US have stalled completely. We've heard President Trump saying he doesn't care about that. He's also threatening to block access to Iranian ports. The situation is very volatile. Are we on the cusp of a major global economic shock if this ends up to be a very drawn-out war?
What happened in the last few weeks was already a very big economic shock. You've seen that the Energy International Agency said it was the biggest energy shock in the last decades. So it was a very significant shock. The longer it lasts, and if it becomes more serious with the escalations that we see this morning and in the last few hours, the risk is that the impact is becoming deeper. Our assessment, for example, with a oil barrel at $100 per barrel for a long period of time, the impact on the growth on our countries of operation is minus 0.4, so a drop of growth of 0.4% and an increase of inflation of around 1.5%.
We're hearing some comparisons with the 1970s oil crisis. Is it that serious? Is President Trump here pushing us really to the precipice? Do you share these kind of grave concerns?
I mean, it's a very significant shock. When we compare to the 70s oil shock, the big difference is that the economies are less dependent on fossil fuels than they used to be. So we have very significantly improved the energy efficiency, and so the impact of oil prices per se, or fossil fuel prices per se, is more limited than it was in the 70s. But if the situation aggravates and stays there for long, then the economic impact is likely to be much more serious.
To close briefly, President, I know that you don't invest in all European economies as an institution, but what could be the knock-on effects on an Europe which is increasingly investing in defence, where borrowing costs and the cost of servicing debt is really spiralling?
For Europe, the challenge will be increase of inflation, will have an impact on the dynamics of the economy. The increase of energy prices also will have a dampening impact on growth. And growth in Europe was already not extremely dynamic. And so this will be a challenge in a context where the fiscal space for countries to, for example, provide some support for household or businesses in order to counterweight the increase of energy price is much more limited than it was in 2022, for example, or just after COVID.